Hey everyone, welcome back to Corporate Decoder, the place where we dig into the confusing world of corporate filings. Today, we're diving into Everspin Technologies' annual report, a company that's trying to make a splash in the memory chip business. This report is filled with twists and turns that might make your head spin faster than a computer processing data, but don't worry, we're here to decode it all. Everspin Technologies, a name you might not hear every day, is a pioneer, meaning an early leader, in something called magnetoresistance random access memory, or MRAM. Basically, they're trying to build better, faster, and more reliable memory chips. Think of it as a quest to create the ultimate computer brain booster. So how did Everspin do last year? Well, they took in about $50.4 million in revenue, but here's the thing, it's actually a drop from the $63.8 million they earned the previous year. Despite the revenue dip, they managed to squeeze out a profit of $0.8 million. But again, comparing it to the previous year, it was $9.1 million. Things aren't looking great. Now let's talk about what they actually sell. They've got different kinds of MRAM chips, like Toggle MRAM, which has been around for a while, and STT MRAM, which is like the new kid on the block aiming to replace other types of memory. But it's not just about selling chips. Another important part of their game is licensing out their technology, selling patents, and collecting royalties. Think of it like renting out their know-how to other companies, which can be a pretty sweet source of income. So how do Everspin's chips get into the world? They have their own sales team, but mostly they rely on distributors who are like middlemen to get their products to the actual customers. They operate all over the world, including North America, Germany, Italy, Japan, Hong Kong, and Taiwan. A major piece of Everspin's strategy involves a partnership with GLOBALFO and DRAS. They're working together to develop the next generation of MRAM technology. The clock is ticking, however. GLOBALFO and DRAS has exclusive manufacturing rights, but those rights expire a few years after a device is qualified. Also, if GLOBALFO and DRAS uses Everspin's tech for their own customers, they must pay Everspin royalties. Now, the memory chip market is a jungle, and Everspin's facing some serious competition. They're up against giants like Infineon, Samsung, and Micron, and also other companies working on similar MRAM tech. Everspin knows it needs more customers to adopt its MRAM technology. If people don't buy into MRAM, Everspin's unique chip designs don't matter much. They have to convince potential customers to switch from the current technology, despite MRAM costing more. Everspin needs to nail all these factors to stay competitive. Everspin outsources quite a bit of its manufacturing. That means they don't have total control over production schedules, quality, or even pricing. If these outside companies mess up, it could be a real headache for Everspin. Everspin acknowledges the impact of recent worldwide shortages of semiconductor, memory, and other electronic components. If they can't get their hands on key components, production stalls, customer orders go unfulfilled, and the company's reputation could take a hit. Technology never stands still. As manufacturing processes get better, Everspin needs to keep up and move its products to smaller, more advanced technologies. It depends on foundries such as GLOBALFO and DRAS. If they don't transition efficiently, they could face production delays and higher costs. The tech world is always hungry for talent, especially engineers in the memory field. If they can't find and keep the right people, they will face problems growing and meeting business goals. The key is retaining existing staff that other companies want. Going global can be a bumpy ride. Everspin knows it needs to grow its international business, but that comes with risks like navigating different regulations, dealing with currency fluctuations, and even political instability. The company states that they believe their current cash and cash equivalents will be sufficient to meet our anticipated cash requirements for at least the next 12 months. That's a key thing investors would be looking at right now. Based on their numbers, they may need to find more funding to keep their plans on track. If they can't get the cash they need, they might have to cut back on their plans. Everspin relies on a combination of patents, trade secrets, and other intellectual property rights. If they can't protect their inventions, copycats could steal their ideas and competitors could gain an unfair advantage. Cybersecurity is a constant worry for all companies. Successful attacks could result in costly operations interruptions, loss of data, reputational harm, and funds diversion. The company may not be able to detect and remediate all vulnerabilities, including on a timely and effective basis. Everspin isn't immune and notes the risk of hackers disrupting their systems or stealing sensitive information. Regulatory compliance can be a minefield. Everspin says that although they have taken precautions, they have inadvertently provided products and services to some customers in apparent violation of U.S. export control laws. If they mess up compliance with these kinds of rules, they could face fines and penalties. The company says that changes to products, export control or import regulations, economic sanctions or related laws, shifts in the enforcement or scope of existing regulations or changes in the countries, governments, persons, or technologies targeted by such regulations could decrease ability to export or sell products to existing or potential customers. Delaware law is setting the rules. This provision will apply to Delaware courts and may limit a stockholder's ability to bring a claim in a judicial forum that it finds favorable for disputes with us or our directors, officers, or other employees. Lastly, the Board of Directors oversees cybersecurity risk management processes, including oversight and mitigation of risks from cybersecurity threats. The Senior Director of IT has approximately 25 years of experience in IT and cybersecurity. The company also uses service providers in an effort to identify, assess, and manage material risks from cybersecurity threats, including, for example, threat intelligence service providers, cybersecurity consultants, penetration testing firms, cybersecurity software providers, managed cybersecurity service providers, and professional services firms, including legal counsel. The Board of Directors receives periodic reports from management and its designees concerning our significant cybersecurity threats and risks, and the processes the company has implemented in an effort to address them. The Board of Directors also has access to various reports, summaries, or presentations related to cybersecurity threats, risk, and mitigation. The Senior Director of IT works with management to prioritize our risk management processes and mitigate cybersecurity threats that are more likely to lead to a material impact to our business. These are skilled labor, increase quality control, improve production cycles, and increase the value. The company has been involved in recognizing revenue related to the performance obligations over time using the input method based on costs incurred to date relative to the total expected costs of the contract, and began recognizing revenue in the third quarter of 2021 over the contract period. This method depicts performance under the contract and requires the company to make estimates about the future costs expected to be incurred to perform under the contract, including labor and material costs. There is a single performance obligation that will depict its performance under the contract, and the customer will receive and consume the benefit throughout the term. There is an estimate how much product will be returned by its customers, and record this estimate as a reduction of revenue in the period the related product revenue is recognized. There is to determine the fair value of the warrants, or a determination that the warrants are antedilutive. The company says that in October 2024, they submitted to the U.S. Department of Commerce Bureau of Industry and Security an initial notification of voluntary self-disclosure concerning apparent violations. Attempts to gain unauthorized access to IT systems or other attacks have in the past, in certain instances and to certain degrees, been successful, but have not caused significant harm and may in the future be successful, and in some cases we might be unaware of an incident or its magnitude and effects. Well, that was quite the deep dive into Everspin's world. It looks like they're trying to carve out a niche in a tough market, but they've got some challenges to overcome. From my viewpoint, there are some strengths and weaknesses to consider. On the bright side, Everspin is in a very specific market, and they do have some partnerships. They're an early player in what could be a high-growth area, but the revenue numbers are something to keep an eye on. The drop in revenue and profit is hard to ignore. It raises questions about demand for their products and whether they can scale up effectively. One notable opportunity is the joint development agreement with GLOBALFOUNDRAES, which could lead to big wins. In the end, Everspin is a company with potential, but it needs to deliver stronger results to prove it can compete and thrive. The market for MRAM is growing. If they are unable to meet customer demands due to supply chain or manufacturing capacity, they will lose market share. Thanks for watching, and if you found this Corporate Decoder episode helpful, don't forget to hit that like button, leave a comment, and subscribe for more deep dives into the world of corporate finance. What company would you like for me to review next? Let me know in the comments below.